Hello, how's everybody?
Hello.
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 Hello,
Hey, how
Professor.
are you? How are you, Sarah? How are you, Stephen? How are you, Monique? Um, so we have just one more day left. Okay. Um, it looks like we have 6 people here in the Collaborate, but we have uh, more people are logged in to the more people are logged into today's forum. Let me just share my screen. This shows me that I have, we have just one more day left. Okay, where is that? Yeah, we have actually, that would be 8. I mean, excluding myself, that would be 8. And there are 2 threads, from me, so there are actually 8 people currently logged into the today's forum, but only 6 people in the Collaborate session. Now, homework 4 was due yesterday, so now homework 5 is due this, was it Friday or
Tomorrow.
tomorrow? Yeah, Thursday. Okay, so yeah, all the lectures all the lectures are done. That goes without saying. Oh no, this is not your class. I'm sorry. That was okay. So homework 5 due Thursday. Okay. Um, with only homework 5 and the final left, I would like to uh, talk about reflect on the topics that are related to homework 5 and the final. I mean, final is everything. Final is everything after the midterm. So final will include uh, homework 3, homework 4, and homework 5. In other words, topic 3, 4, 5. Okay. We had some. You may understand that we had some extra topic, but the extra topic is not going to be on the exam because there wasn't any homework about the extra topic. This extra topic is about stock valuation. This is literally the extra topic. So it's basically financial statements, pricing, overhead and inventory, and depreciation. So let me just open. Okay. So that was, so we did, this was done already in the homework 4, and in homework 4, this I've noticed I have, I went through, I would say at least about 60% of, 60%. I went through 60% of the homework, submitted homeworks. And so 6% of you got it back, the graded homework back. But one thing you are pretty much, one thing that is commonly found was that a lot of you are confused about the markup rate based on cost and markup rate based on uh, price. And actually, I was talking about this also yesterday. And since some students were just copying the work examples I did, they used it as a template. Um, well, you may, I provided a template um, for you to use it as a, foundation of your work. But then the thing is, ultimately, it behooves you, right? It falls upon you to uh, adapt it to the new problem environment. Because yesterday this is LU8-2. Normally, only the extra practice quiz is assigned, but sometimes so normally it is, something that has A at the end, LU8-2A. But, for this problem, I also assigned this. But so then basically 8-2 and 8-2A are basically same pattern. They just have different numbers. That's all. So if you got this right, you can get 8-2A. What should I call it? The sister problem or parallel problem. You can get it too. You can get it right too. But a lot of you made a mistake there. Why? And I pointed it out also yesterday. The markup rate used here is the markup rate based on selling price. Markup rate on selling price, not cost. But a lot of people did that as, a markup rate based on cost. Why? Why? And one reason, as I go back to in the example, I did it as markup rate based on cost problem. Okay, why? Because this is exactly this problem. So if the problem to be assigned for homework, and if I do it exactly as markup rate based on price, then I'm already giving away the answers. I'm already giving away the solution. So I tweaked it, right? I simply tweaked it. So in the example, I made it as a markup rate based on cost problem. Okay. But then it's ultimately, it falls upon you to verify it, to check, if that template would apply to this problem. I mean, when you have a template like this, and then when you read the problem like this, then you should wonder, oh, in this problem, the markup rate is based on selling price. So is this the appropriate way to do it? And it's, once again, then, it's your responsibility to make necessary adaptation. You understand? Then you should have done it as this, right? Some people did it right. Some people did it right. But some people simply, that's critical thinking. First of all, that's critical thinking. But there was no critical thinking. People who did it just, as it was, didn't perform any critical thinking. They just, and that's the problem. If you don't, They don't realize that it's ultimately it falls upon them, right? Ultimately it falls upon them. When you say, oh, professor, I just, used your work as a template, so how could it go wrong? Look, my example was tweaked, okay? I had to tweak it so that it won't be exactly the assigned homework problem, okay? So then it is your responsibility to, make an adaptation to the new environment, okay? Another thing, so we had inventory estimation problem, and the cost ratio. We used, gross profit method and retail method, and I explained the difference between the two. Um, and the thing is, um, and also inventory estimation, and there is, next topic is inventory valuation. But what's the difference between inventory estimation and inventory valuation? Now, uh, both will serve basically, now inventory valuation is more important. It's more meaningful. I mean, more useful for the uh, manufacturer or for the businesses, for the companies. Inventory. I mean, retail or manufacturing doesn't matter. It's more useful for for the uh, uh, the businesses. Uh, Inventory estimation is literally estimating inventory, um, literally estimating actually CGS rather than ending inventory. It is inventory. The purpose of inventory estimation is literally making an estimation, estimating the CGS. So it is more useful for the IRS. I mean, it's not only IRS, but IRS could be one um, beneficiary of inventory estimation. And I explained it at length yesterday because uh, companies have, all the companies have motives, right? Sufficient motives, right? To minimize, make their taxes look, make their minimize on their taxes. So they want to make it look, uh, they want to make their earnings look as small as possible, or earnings before taxes, right? That doesn't mean they want their earnings to be small, but they just want to make it look smaller than it really is. The taxes will be smaller, right? Uh, to do that, they would make their CGS look bigger than it really is. I mean, they have motive. There can be a motive for that. So then, how would IRS check? And of course, they would only have they will only inspect once they have really um, they have identified a company that is reasonably suspected of tax fraud. I mean, IRS doesn't have resources to go after every company, right? They would have they don't have manpower, or they don't have they have money, right, to uh, support that manpower. First of all, you would have huge, to go after every company to check if they. So first of all, that's the job of the CPAs. Companies companies file taxes through CPAs, public accountant firms, right? public accounting firms. And the public accounting firms are basically, acting on behalf of IRS to examine and verify that the company's tax reporting is true to their best of their knowledge, correct, and they are not lying, and then it's within the reasonable bounds of all the allowable deductions and allowable perimeters, right? You understand? So then the public accounting firms, right? And there used to be 5, so they used to call it big 5s, like KPMG, Ernst and Young, Price Waterhouse Coopers, and Arthur Anderson, and Deloitte and Touche, and Arthur Anderson was the biggest one, but back in 1990s there was Arthur Anderson got involved in a gigantic tax fraud. A case called Enron. Enron was an energy company, and they were actually they cooked the book. They cooked the book. They made they cooked up. In other words, they forged everything. They made Arthur Anderson was and Arthur Anderson. So they were not making any profit. The company Enron wasn't making any profit, but they cooked the book to make it look profitable. Of course, this cannot be done without the the collusion of the accounting firm, which was Arthur Anderson at the time. And why did they do that? Of course, to pump up their, stock price, But then, they got caught, and the Arthur Anderson, which was the number one, the biggest, accounting firm in the U.S., was, broken up, right? Because, I think the CEO or, a couple of people, a couple of the top management went to jail. They got, of course, of course, guilty verdict. They were sentenced. Obviously, in this kind of, tax fraud. That's the fraud against the state. You can't escape that kind of, mess up, or that kind of a case unscathed. So the top management went to jail, and but very powerful people were shareholders of Enron at the time. Dick Cheney. You know who Dick Cheney was? That was the vice president in the first George Bush Senior administration, when George Bush, the father Bush, George W, not George W, but George Bush Senior was the president. And that was before Bill Clinton. Bill Clinton served 2 terms from 8 years, from 1992 or 3, I believe. So until 1991, like 88 through 91, or 88 through 92, it was George Bush Senior. And during that administration, Dick Cheney was the vice president, and he was, one of the major shareholders of Enron. Whether he knew about this or not, he's not management. He's just a shareholder. Even though he was probably a major shareholder. Um, but anyway, so Enron, the company was, bankrupt, and they were, broken into pieces. I mean, they were sold to, by pieces, and then um, Arthur Andersen was broken up because um, the accounting firms have two roles. If you think about it, look, first of all, because IRS cannot go after every company, right? They kind of delegated the role of inspecting, examining the financial statements of these businesses, right? That role of uh, inspecting and examining the books of the businesses, that role was delegated to public accounting firms. But then, if you think about it, public accounting firms are acting on behalf of IRS, so they have to serve the 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 goal of IRS, right? The mission of IRS. But on the other hand, if you are acting on behalf of IRS, then um, how would you retain your clients? You understand? The companies are hiring them to do the tax audit for them on behalf of IRS, but in favor of the companies. I mean, if the public accounting firms are only serving the mission, but look, public accounting firms are not being paid by IRS; they are being paid by these companies. You understand? Then actually, if the accounting firms are serving the mission of IRS only, who is not paying them, then and if they are very rigorous, who's gonna hire them, right? Make sense? So public accounting firms are in a they are in a dilemma, right? Because that means they have to serve two masters. One master is IRS, and they have to do a fair job of auditing these companies, and in the tax report to IRS at the bottom line, these public accounting firms will sign at the bottom of the statement, to the best of our knowledge, this company's tax reporting is correct and meets all the meets all the requirements and the perimeter of generally accepted accounting principles and tax law, things like that, right? You understand? And then but then by signing that statement, what does that mean? They are putting their neck on line. They're putting their neck on line, right? If this statement is not, so in other words, if anything goes wrong, if any of that tax report is found to be not true, then the one who signed that statement will be held accountable, right? So accounting firms will have to be public accounting firms will have to be very rigorous and strict to execute the mission of the IRS. But on the other hand, they will have to serve the interest of the their clients too, and their clients are these businesses. And if they are being too rigorous and strict, nobody will give them the job, right? So they are in a very um, subtle position, or they are in a dilemma. If they serve IRS too faithfully, then they will have no client. If they serve the best interest of the client, then they will get axed by IRS. And that happened. That Arthur Andersen case, Enron case, is exactly the um, um, a good example of what happens if accounting firms, are not sticking to their ethical standards, right? So Arthur Andersen was broken up. So usually these accounting firms perform two roles, as I told you. One is, auditing, right? Tax auditing. An audit in this case means, just doing the tax report. I mean, making sure that the company's financial statements are correct, right? And audit being used by IRS is a different thing. So if IRS suspects, despite public accounting firm signing the statement that this is true, if they suspect that it is not, then they can go after these companies, and the accounting firm will be in trouble, right? Because if anything is found, like that they were not doing, uh, they uh, that they betrayed IRS's trust, then they go the same, they will meet the same fate as Arthur Andersen. So basically one, and then they will IRS will directly audit the company, right? So that's the audit in the sense of when you may have seen in the movies that the business owners are afraid. They you hear them say in the movies, oh, we're being audited, and they are in panic. And what does that mean? That means IRS is directly auditing them because they suspect there's a tax fraud. Second, just audit in regular sense, that's public accounting firms doing the tax report for the companies. So one function of the public accounting firm is that they do the audit for the companies, but then they also do the management consulting. And what management consulting are they talking about? I mean, human resources or what, marketing? No. They do tax consulting, right? Their consulting is, mainly tax consulting. In other words, how to save on taxes, how to minimize taxes. So then think about it. This tax consulting and audit, are two conflicting functions, right? Don't you think? There are two, conflicting functions. So they are basically, it's a schizophrenic, in a way, schizophrenic. Public accounting firms are, by their inherent nature, right? By their inherent nature or by their birth, it's an entity of schizophrenic traits, right? So two conflicting, totally contradictory functions, and they have to perform. So in case of Enron and Arthur Andersen case, that serving the interest of their client, that was that prevailed. The other role, serving the IRS's mission, right? So, and then what happened? So they were broken up, and then Arthur Andersen is now. They broke up these two functions, right? Tax consulting function and accounting firm function, and they cannot. Now it's called Accenture. Company is now called Accenture, and Accenture is, I believe, I don't know. It's either Accenture is doing only tax reporting, or either that or tax consulting. Okay, they cannot do both, right? So Accenture is former Arthur Andersen, and so the reason I'm talking about this is why everything. You just everything has a reason. That's what I call soul searching, right? I mean, not me. Soul searching is an expression. Why? Soul searching is question about why, finding out why, and all this. Why is there? Why do we do inventory estimation? I mean, why? I mean, it's just mathematically. All that mathematical part is, you might think it's just mechanical, but without understanding why, it is, why it exists, then everything is mechanical, right? That's why that happens in the homework. Without thinking, without critical thinking, you just do, you just copy my template and do it without thinking. But the whole purpose of this class, not only this class, but college level class, all college classes it should be about the soul searching. Why we do this, and why is it like this? I mean, what's the difference between inventory estimation and inventory valuation? The name is similar, names are similar, but they are born of two different reasons, totally different purposes, right? And then inventory valuation is literally about valuing ending inventory using LIFO FIFO weighted average method. But inventory, and it's basically for the company. It can be also used by IRS, but as I said, IRS is just one example, and because I use IRS as an example because it makes it very clear why why it is relevant, why estimation, inventory estimation is relevant. I mean, it makes a very drastic example. You understand? I'm not saying, I don't know if IRS is really going to use cost inventory estimation when they as a metrics, right? But it could be a reasonable approximation of thought process, right? Thought process that can be used, right, by IRS if they suspect, right, the company is cheating. And break-even analysis is, I talked about this actually, I talked about this a couple of days ago, actually, not in this topic, but as I was still doing the financial statements. So you got to go back to that. That was what they it's posted there. God, I got locked out already. I don't know if it was this or maybe it was 12. Let's see. Takes almost. There are. No, let's see. Yeah, maybe it was the 6th. No, no, no. Maybe not. Okay. Um, that wasn't the 16th. Yeah, because I talked about it in connection with in connection to financial statements. So it should be. Come on, why is it taking so long? So August 12th. Because it's pretty much, income statement thing. So here, if you August, is it 9th? How could it be only 9th? Because, well, no, no, no. What am I? What am I? Oh, this is not. Oh, I gotta go into financial statements. How come this one? Why? Oh, it was already grayed out. Last available August 15th. Look, if it is grayed out, no problem. It's in YouTube, right? And saying, anyone saying, Professor, anyone saying, Professor, the video was not available anymore. I couldn't study because it wasn't available anymore. I told you, it's on YouTube. So, where did I talked about this at some point. If it wasn't on the 12th, um, see, it must be on the. If it wasn't on the 12th, it was somewhere there. Okay. If not the 12th, the recording of the August 12th, then it must be like 11th, 10th, or one of these. Yeah, there. It's already uh, the front page, the picture is already. Yes. So that was the 11th. It's there in the see, as you can see, it's there in the YouTube. It's a matter of it's not so much trouble to you watch YouTube every day, I believe you, but not watching something like this, but probably some rappers or some celebrities or entertainers, Kylie Minogue or whatever, um, Kardashians, maybe you're watching that, but that's all rubbish. I'm telling you, that's all rubbish. It doesn't. They don't. They only all those show business people. Um, they don't give you money. They take your money, right? but they don't help you. They don't help you make money. I mean, they don't generate, they don't give you jobs, or they don't give you means to generate income for you. All right. Um, but the CDs or DVDs you buy of them, or their videos you download from internet. I mean, if you have to pay for them on iTunes or whatever, um, you're helping them get richer, but they are not doing anything to make you richer, right? So you have to when you use YouTube, please use YouTube for something like this. Okay, I'm not telling you to subscribe to my channel, but you don't have to subscribe. But when you these resources are, what I'm telling you is the resource is there, right? The resource is there without any limitations. Actually, people who are not my students, people who are not even, they can access this, so this is like a free class. So anyway, so then, I'm not going to go over this again. And so the next, oops, so then, now let's go to inventory valuation. So what is the difference between inventory valuation and inventory estimation? So I said, so with inventory estimation, because it's based on the cost ratio, right? And once again, cost ratio is basically 1 minus markup rate based on selling price. If you think about it. Think about it. If the cost ratio is 70%, what does that mean? 70% of the price is cost, right? 70% of the price is cost. So then what's the other 30%? The other 30% is the markup. So this 30% is the markup based on selling price. Isn't that right? It's the markup based on selling price. Oops. Okay, and the 70% is the cost ratio based on selling price. Okay, so based on that, you can tell whether something is, you can estimate what is the CGS, and how do you know that? Because revenue is an open data. Because revenue is something that is you cannot think about it. Income statement, revenue is there, right? In the income statement, revenue is clearly listed on top. And then you might say also, then isn't CGS also listed? Yes, CGS is listed in the income statement. But again, if I'm IRS, I would not trust that CGS 100% at its face value, right? But then revenue, they cannot cheat. Why? As long as, of course, even for revenue, they can cheat, because if it is only cash transaction, you would understand, some, if you go to some stores, some, restaurants, there were, pizzeria, some Italian restaurants, some pizzeria, not only Italian restaurants, also some, Korean restaurants, or, whatever restaurants, when you pay, in cash, and there is some, pizzerias, have this policy, in the past, when you go to a pizzeria in Little Italy, Soho, some famous pizzerias, have their, policy, cash only. And that, um, why? Well, cash, it's obvious. I mean, their business is doing well, so they can, they can ignore uh, uh, the customers uh, who can, they can ignore the customers who have only credit cards. Um, but that is a stupid thing. First of all, they want cash only because if it is cash transaction, there is no trace, right? Of course, there's cash register, but if you have old cash register, um, it doesn't even print out uh, any receipt. It doesn't even print out. So there's no physical trace of the transaction, right? And then so they want to they want to minimize, they want to evade taxes, right? If it is, but the credit or any other in B2B, it's clearly traceable, but in B2C, credit card transactions or transactions with check can be traced. So IRS has, some record of, transaction. So they have, so you cannot cheat, or you cannot cheat with the revenue data, right? Because IRS can always. But then CGS, depending on how you because they only report to CGS in the statement, and there's no way IRS, they don't report um, how much of that CGS is capital, how much of that is payment to capital, or payment to the labor, or payment to the in other words raw materials. There is no further breakdown. I mean, if on request, they will have to, on request by IRS, they will have to provide that. But unless they are getting audited, that won't be requested. So there is no detailed itemized breakdown for CGS. So whatever they declare as CGS, IRS will have to take it as it is. But but in reality, let's say CGS was only $1 million. Their revenue was $3 million, and actual CGS was $1 million. But on in the tax filing, their income statement, they stated as $2 million. And as long as the accounting firm, public accounting firm, signs it, that it is true, IRS wouldn't unnecessarily suspect. But if they really suspect, then it's both accounting firm and a company that will be in trouble. So that is inventory estimation. And then what is inventory valuation? Inventory valuation is tracing CGS by valuing the ending inventory, remaining ending inventory. You understand? So it is like this. I mean, once again, the income statement, and the expenses CGS section, right? CGS section of the income statement. And this is the second day I'm, so CGS section looks like this. We will, the CGX section will start with beginning inventory. And again, in your homework, I made, very meticulous comment about that. This is enough. Don't spell it out. I mean, some people spell it out. It's very wordy and it's long. It's lengthy. So, and if you put it here in T, if you type it in T2, spell it out. There are some, inventory turnover ratio, add, cost. Look, it expends it too much. It's gonna expend it like, that's what I don't like. That's inefficiency. So just an acronym that, this is already, good enough to understand. I mean, someone who is totally a stranger to this would not understand, but anyone who is trained in financial economics, financial accounting, they will know what that means. That's beginning inventory. Okay? Would this mean, I mean, in this context, will it mean, begging for invitation? Huh? That doesn't make any sense, and it's just ridiculous. It's a nonsense. And CA in our context would mean current assets, right? Will there be anyone who would interpret it as California? Huh? Isn't it ridiculous, Huh? Because although it's been only a couple of weeks, but you are a student in this class, and this class so far has been about financial accounting. I mean, the material was financial accounting, but our the class, our goal of the class is about architecturing the solution process, right? In algebra, in algebraic. That's what is algebraic modeling about, right? Then in this, although it's been only like 3 weeks, 4 weeks, you are a student in this class, and then you should understand in the context of this class, then CA wouldn't mean California, right? You don't have to spell it out like, inventory, turnover ratio at retail, inventory turnover ratio at cost. Think about it. If you type it in a cell is not a text editor. Excel is not a text editor. And if you do it, if you type it in like that, it's going to expand. It's going to stretch out the column width. And you might wonder, what's wrong with that? It is wrong because it's not a good form. It's ugly. Because just one column is expended on this, just because of that. Just because of that label, one, and then in that column, other labels which are short, that doesn't have to take such a wide, column width, will just unnecessarily have wide column width, and there's a lot of dead space for that, problem. You understand? So from the day one, I've been emphasizing the importance of briefness, conciseness, succinctness, right? Uniformity, uniform structure, uniformity and consistent uniformity through and through. If it is not consistently uniform, It is a very poor. It is, because it looks all chaotic. It's unprofessional, first of all, and you have to be concerned about that uniformity, structural uniformity. I'll give you an example. Now, hopefully this won't reveal. Let me stop sharing for a while, because I will have to. Okay. Let me share again. All right, this worked. I hope Okay. Okay, let's take a look at this. And as you can, this is, somebody's, homework. And then you see, it took me a lot of hours, it took me almost a whole day, because it takes so much time to, um, correct the, and a comment, correct and comment. First of all, this is what I'm calling, inconsistency. For example, this problem, uh, well, it's two-column method, right? Basically, the two-column method structure. So there's, data expressed in uh, cost and data expressed in retail. But then now, think about it. First of all, you don't have to, say January 1 inventory. You don't have to, because, this takes too much column width. Is it necessary? Do we have to declare, this is, Jack Baker who bought, car stereo, set or whatever? Doesn't matter. You just can call Mr. X. So this is the beginning inventory. You can just say, beginning inventory and save space. And then you don't have to say purchase at cost, because it's just purchase, right? Net purchase. And then because this column heading, column C is saying at cost, it's cost, right? It's a look, think about it. If this label meets with this label, what does that mean? That's the purchase at cost. Isn't that right? Also, that's purchase at retail price. So if this column heading meets with this row heading, what does that mean? That's the purchase at retail. That's the reason for two column method. I mean, if this is the purchase at cost, then what does this mean? Do you understand? Does that mean this is both net purchase at cost? It cannot be two. One is purchase at cost, but the other one is value of net purchase at retail price. And even missing the dollar signs, and then net sales. Okay, so this is the sales revenue. And then what is this? Ending inventory. Okay, and that's the ending inventory. Add retail isn't necessary. You don't have to spell it out, just end inventory. You can read it as ending inventory. You don't have to, just because you wrote it like this, you don't have to read it as ending. It's just an acronym, so you read it as ending inventory. But when you write it, just write it as ending. Okay, this is beginning inventory. You don't have to spell it out. That's childish. If you spell it out, that's elementary school. You can just write bag in and read it as beginning inventory. Why can't your brain process that? And also, why can't your brain process that, oh, this label meets with this label, then that's purchase at cost. And this label meets with this label, that's purchase at retail. So then you don't have to say like this, ending inventory at retail. You don't have to, because that will take, the column width is currently like, this is the column width. But if it's going to take this much column width, which is totally, useless unnecessary for other, other rows. And then, now think about it. Let me move this. This is the revenue, so this is expressed only in this column. The data is given only in this column because this is the sales revenue. But what did I say? CGS and revenue are two sides of the same coin. You understand? CGS is the cost side of the revenue, right? Revenue is the price side of the cost. You understand? So in my notation, in every one of my work, so this is the problem, because people do not study the videos that were posted there. And you might say, oh, I can't find it anymore. I told you, can't you search the YouTube? I gave you the playlist name, and you just go there and you will find it. And without studying the lecture video, you try to do it, and then you end up with all these chaos. So then think about it. Ending inventory. This is ending inventory at so in my work. So one problem is people don't study the lecture videos that that were posted there, and those who even among those who study the lecture videos, they just copied without thinking, right? Without making adjustment to the new problem environment. Now, in my notation is, in my work, is CGS slash sale. So what does that mean? Sale means sales revenue, right? So CGS slash sale means, it is CGS in this column. It is CGS in this column, but it is sale revenue in this column. Do you understand? So then, I don't know how many of you are paying attention to this, but look. So then we can find the CGS. Why? Because there is a cost ratio given. And if you, and this is the problem again. Why do you have already cost ratio there and calculated correctly, but then why do you do this again? This is like doubling it. There's no point in doing it. You can just turn this into percentage, right? Why do it manually? See, this person manually put it there. You see what I'm talking about? And I don't want you to manually put anything there other than the initial data. You're not, supposed to hard code anything, especially when it comes to so this was totally unnecessary. And then this is cost ratio, and then cost ratio remaining is actually what this means is 1 minus cost ratio then. Isn't that right? Why do you put it like this? Why do you have to be wordy? Huh? Being wordy is, I've been telling you, being wordy is rubbish. Wordiness is rubbishness. You can put it like this. Isn't that right? That's thinking. That's very systematic thinking. If this is the cost ratio, this one is, and I would align it because you put cost ratio here, I would align it like this. Otherwise, of course, to align it, it's better to put it like this. But then, if that may not look right, you can do it like this. And why is it like this? This is, again, this was, just manually entered. As you can see, this is manually entered. Why do you manual? And it's not even percentage. Cost rate, it's not even in percentage. What does that mean? 37.17? That's like 3,700% in percentage. So does that make sense? And this doesn't need to be, you can simply do, what you can do is, by definition, it is 1 minus cost ratio. You'll get that. Okay? And then, ending inventory. So we can first find the CGS, which is, we have the cost ratio. So cost ratio times, right? I've been telling you, cost ratio means, the percentage, the cost that percentage of cost out of price. So, and revenue is price times quantity. So it's aggregate revenue, right? So it's just the same concept, the cost ratio of that percentage of the revenue would be the CGS. You can find that. And you got to put it $, so it won't be and then this should be highlighted because this is the thing that was, and then ending inventory. Ending inventory is now either one of the two ways. What is this? And this person just manually entered this. But this is not initial original data. This is not the initial data, right? What this is actually the sum of the beginning inventory and sum of the beginning inventory and net purchase. So what is that? That's using auto sum. You can simply, what's happening? Using auto sum, you can add them. That's it. Is it so difficult to give it, just $sign like that? Huh? Everything should be. So that's the uniformity in the, uniformity in, and consistent uniformity in the structure, in the system. So then, and what is this? Your beginning inventory plus net purchase, that's GAS. Okay. That's GAS. Why can't you see that? Huh? Giving interpretation to correct interpretation. If you comprehend it, and then ending inventory is from GAS. If this is CGS, and subtract CGS, then that's the ending inventory, right? Okay. So this also needs to be highlighted. And this person got this wrong. Why? Because see what he or she did? D110, this is D110 times C111. C111 is C113. What is C113? It's the 1 minus cost ratio. This is actually what? This is actually the markup rate based on selling price, right? In other words, out of $10, if 60% is the cost ratio, then $6 is the right. $6 is the cost, then $4 is the markup. So what this person got here is not the ending inventory, it's just the markup, right? In other words, think about it. Then you add these two numbers, then you will get to this, right? So this is completely wrong, right? And why is it here, right? Ending inventory, this is not the place for ending inventory, right? This is ending inventory at cost, so it should be here. That should be the place for this, right? So this is what I'm warning about. This is the childishness. This is chaos. Children's minds childish mind is full of chaos because, children don't have, of course, as you mature, you will have more structure, you will have more system. But just a kid, being a kid, elementary school, your mind is, like the best you can do is drawing, painting. And then they call it, oh, they clap their hands, oh, you are so talented, such a creativeness, blah, blah, blah. Yeah, chaotic? You call chaos creativeness? I mean, of course, beauty is in the eye of the beholder. So there are some, uh, irrational, a lot of irrational behaviors and irrational things in art, right? And lack of order, complete disorder that can be pursued in art, right? And they still rationalize it as creativeness. But most of the great artworks, classical period, Renaissance period, they are all, they pursue perfect order. Leonardo da Vinci, his works are the works about perfect order. Where is order here? I mean, there was some order here, but there is no order. This one, why is it here? This is like a missing child, or a stranded passenger, right? Somehow everyone is on board. This guy is stranded alone in some remote island, or completely, separated from the. You understand what I'm talking about? That's lack of, that's lack of architectural design. Look at all the great architectures. Aren't they in perfect symmetry? There is some order, perfect, pursuit of order. Have that mind. Please have that mind. Have that mentality of the architectural order, structural design. I hope you have learned something from this class. And it's not only, I've been telling you, doing math is not the most important thing of this class. And the math being, used in this class, utilized in this class, is nothing more than like, 8th grade level math. I mean, if you have 8th grade level, mathematical intelligence, you can do it. It's not a big deal. But that's not the point of this class. The point of this class is, how do you design the solution process? And designing the solution process requires that architectural order, the mind that pursues the architectural order, right? And the systemic structure that will minimize redundancy and inefficiency. It has to be an efficient system that can be reapplied over and over, not just for one time use. And that's what I've been talking about all this time, about the soft coding, because people who do hard code the numbers into the formula, they are ruining their own work, because by hard coding, then you are that solution process that model can be used only one time. It cannot be reapplied. Every problem you will have to do it all over again. An elementary school kid would be doing like that, because an elementary school kid doesn't have that mind about the efficiency. He or she will do the similar problems of the same pattern over and over, or not thinking about just devising one mechanism that can they cannot think about that mechanism. If you have a mechanism, it's like a computer. The early computer, 1950s computer, which is a giant machine, but the idea is you don't have to do the calculations all one at a time by hand. You just input the data, you feed the data into the machine, then out comes the output, and then this can be reused over and over and over and over. That algorithm that solves the problem can be reused over and over and over. But you don't think about that algorithm. You can't think of that algorithm. You can't think of that algorithm. Just like the kids, elementary school kids who can't even dream, imagine of any algorithm. But I've been telling you all this time, what is important is being able to design that algorithm. So that so that when you are given a new problem set of the same nature, same structure, all you need to do is just change the input data. Substitute the input data, and the solution will be processed automatically by Excel. So architecture, designing this system, designing that mechanism, and architecturing the most efficient system structure. That's the point of this class. So there's no point in doing the homework the way you know, or the way you think is, if you don't do it without any architectural design in mind, it is useless. No matter how I know even doing this is already, big achievement, even because it's been just 4 weeks. It's been just 4 weeks, and this week is the 5th week. So during this 4 weeks, how much could you have done? Huh? I mean, it would have been, but over time, if you practice it the way you were being taught by me, you will become good. You will become proficient in this, and of course, the more you practice, you will become an expert. But so anyway, that's too much of so let me just go over. So again, the structure of the CGS section in the income statement is beginning inventory and net purchase And if you combine these two, that's called GAS. Of course, you may or may not have this. That can be, GAS may be skipped, but I would rather have it there because that way it shows step by step everything. And then CGS comes next because what happens next is the sale. So again, this is the cost side, right? This is the cost side. And I told you on the price side, the counterpart on the price side, the counterpart to CGS is revenue, right? You understand? There are two sides of the same coin. Think about it. It's called cost of goods sold. It's also called cost of revenue. Why? Why is it called cost of revenue? Because goods sold will give you revenue. Isn't that right? Total number of goods sold times price will give you revenue. And then, after that, you'll be left with ending inventory. Okay? So, and I also told you, in the income statement, actually in the income statement, the they don't appear in this order, they appear in the other order. In other words, ending inventory comes here, the CGS comes here. And I told you, yeah, why? Because this is the conclusion. CGS is the conclusion of this section, right? Not the ending inventory. Of course, chronologically, ending inventory is the conclusion of your operating activity. But then, when you report tax, right? I mean, income statement should have CGS here, so that then next it will be operating expenses, right? All the conclusion of the that section, in other words, indirect cost section, all the other, all the line items of the indirect cost section, and the conclusion of that is OPEX, operating expenses. So that conclusion of this section CGS, conclusion of the indirect cost section of OPEX. So you can add those two numbers, right? Conclusion of this section and conclusion of the indirect cost section. You add them up, right? Before subtracting from the income. So that's why in the actual income statement they are switched, right? But for inventory estimation and inventory valuation purpose, we laid out in this order, which is really chronological order, right? We follow the chronological order because that's how it happens. So then the idea of inventory valuation is we want to put the dollar value on the ending inventory. How? I mean, why? Don't we know? Yes, we may know. I mean, it's possible because these days, but these days, everything has barcode. So Just by scanning barcode, we can. But in the old days, think about it. In the old days, the idea was ending inventory can come from many sources. What I'm talking about is, so it's this net purchase because it's this net purchase that causes the that causes all this, issue, right? All these issues. Why? First of all, our GAS, goods available for sale, will consist of a lot of things. First of all, beginning inventory. Now, beginning inventory was already there, right? Remember, when before starting this operating period, and let's say quarter, right? Because the basic operating cycle is operating period is quarter, right? Every it's operating cycle. Beginning inventory is actually the ending inventory carried over, right, from the previous quarter, right? So then whatever is in here was purchased in the previous quarter or even before that. Makes sense? Because and even the net purchase during this quarter, it may not be. We have been assuming so far that the net purchase has been made only once, but net purchase can happen at various points. So here, in this example, this is net purchase, right? I didn't write it as net purchase, but And if this is the first quarter, right? We know this, During the first quarter, right? There were 3 purchase points, 3 points where this purchase was made. Because it's first quarter, monthly, maybe January, February, March, right? 10,000 units, 8,000 units, 10,000 units, and each time the price could be different, isn't that right? Because the price, and if you go to a supermarket, the price, changes every day. I mean, maybe not every day, but price tends to fluctuate, right? So let's say this is what kind of product would have this kind of unit price? Let's say this is a tennis ball, right? And so you are running a sporting goods store, and in this sporting goods store, of course, because it is sporting goods store, you would have tennis balls. And the tennis balls, each tennis ball is, I don't know, not even $1, but every month the price may be different. Why? Of course, because of the demand and supply. Because if there is no demand, the price won't be that high. If the demand goes up, the price actually. So if it is tennis ball, the demand for tennis ball will be very low in January, right? Tennis is generally an outdoor activity. You can also play squash indoors, but in the winter, generally you don't play tennis, right? Actually, to make it more realistic, this might be like, I would probably make it like 9,000. Okay, and everything changes again. And then February, still very cold. And March, as the weather warms up, people start to play tennis more. So then obviously this makes sense. The increase in price, gradual increase in price makes sense, right? Now, in the next quarter, April, May, June, the price of the tennis balls would be much higher. But that makes sense. And then so it's not difficult to understand that our question is, our problem is here. These days, I don't know if each tennis ball has barcode. I believe tennis ball is sold by like 5 in a cylinder, right? They have like 4 or 5 tennis balls in a cylinder. The cylinder may have barcode, but each individual tennis ball may not have barcode, right? I haven't checked, but if anybody has any experience, you can you can help me out here if the individual tennis ball has barcode on it. But I don't think so. I don't think each individual tennis ball has a barcode. So the point is, when at the end of the first quarter, then if we have, there were 27,000 that was net purchase. So and after the quarter is over, if we have sold all of them, that's good. But most likely we will have some ending inventory, something that is left unsold. And in ending inventory, right? How do you know all of this ending inventory came from the same batch or same stock? You understand? There's January batch, there is February batch, there's March batch, right? And then these 4,500 units in the ending inventory, they may have come from some from January, some from February, some from March. I mean, from this batches, each of these batches, there would be some that remain that was left unsold. Then the question is, what kind of price are we going to put on it? I mean, what kind of value? I mean, these 4,500 units in ending inventory, what should it be valued as? Okay, so then that's the question. So unless we can trace every tennis ball back to its own original batch, it's not going to be possible to. I mean, which is not really which is most likely, unfeasible. Why? First of all, as I said, the cylinder, right? The cylinder that contains tennis balls may have barcode on it, but not each individual, right? Tennis ball. And in the old days, the days before the barcode, there was absolutely no way to trace it. But in the back room, in the stock room, or in the warehouse, or you have this 4,500 that cannot be traced back to its origin. But then what would you do? You would have to use an average. But again, do we use what kind of average do we use? Do we use we'll use if we take simple average, no, we don't use simple average. Why? Simple average is used only when these are all in same proportion. In other words, they are, let's say, you might think, This is the middle number, right? Of these three unit prices, this is the middle number. That seems like that seems quite like the uh, average. No. Uh, Simple average or simple mean is only good when they are in same proportion or same quantity. If they are all 9,000, 9,000, 9,000, you can just simply add them up and divide it by total number. Um, but they are all in different proportion. Let's make it more drastic. It was a pure, here, if you take the simple average, right, which is, sum of these three divided by 3, I will still give you this, right? Or, but you can't do that. It's just a pure coincidence. What if this is all different? For example, they are already different, but it's a pure coincidence. But let me just vary these numbers slightly. How about this? It just happens to be the same number, but okay, you see, it's not exactly seven. It's not exactly 70 cents. But if you just take the average, simple average of, just take the simple average of these three numbers, is to, right? You see what I'm talking about? Okay. If I make it very drastically different, let's see, it's gonna, you see? So that's why, simple average cannot be used. You have to use, weighted average. What is weighted average? So we are basically re reflecting the weight because they are all in different proportion, right? We have to reflect that weight. So we are weighting these unit prices by their quantity. Simple. It's just, right? Uh, Different proportion is the weight. I mean, the weight comes from what? Weight comes from this different proportions. So you weight them like that, and then that's basically dollar, amount. And then, so this is the total of that. Where's the sum? So it's the sum. This is the sum of that, and this is also the sum of that. So you divide the sum of the dollar amounts by the sum of the proportions or the quantity, right? And then that's how you find weighted average. So one method. Let me. You see, I should make it. Georgia Pro looks like a very nice, attractive font. So there you go. So then, there are three inventory valuation methods. One is weighted average cost. I just put it like average cost, but better term is oh, what I see what happened. It's sometimes the keyboard, automatically goes into French. I don't know why. And French keyboard layout is, AZERTY, right? Because in English keyboard layout is QWERTY, QWERTY. The first row, the left side of the left half of the first key row of the keys is QWERTY, QWERTY, but in French keyboard it's AZERTY. So that's why is it? And then so weighted average method, weighted average cost. Because we don't know where these 4,500 units came from, which batch it came from. We used the weighted average, okay, and then multiplied by the weighted average. So here, what you see is that, and then we have FIFO and LIFO. FIFO and LIFO are simply, simplifying assumption, and it doesn't necessarily reflect the reality. First, FIFO is first in, first out. So this is more kind of logical, very simply, and reasonable, because whatever came in first must have got sold out first. Okay, and then that means, so sometimes students get very much confused. Why? Because it's first in, first out. They think they will apply. Okay, so this 4,500 must have come from the January batch. Why? Because it's first in, first out. Look, they are not thinking. There's complete lack of critical thinking. What that means is, yeah, it came in first, so this one got sold first. So if it got sold first, it sold out. This got sold out. So then it cannot be ending inventory, right? Because it got sold out. In other words, this is going to be part of the CGS, not the ending inventory. You understand? So then ending inventory this must have come from the last batch. Because in the last batch, 4,000, because whatever is remaining in the ending inventory must have come from the last batch, because whatever came in before it, first batch, must have got sold out. So to do this, we have to, obviously 4,500 could have come entirely from this, right? It's entirely from, so it's not a difficult thing. Here, this may look quite complicated, but the idea is, you might think, oh, why is it necessary? Now, this is an if command, and we didn't have, I explained this also in financial statements, in the financial statement. So what does this is very useful algorithm. It's very useful algorithm, because a lot of things you can do with this if command. If Q4, which is this, right? Q4 is greater than L4, greater than L4, right? L4 is this. L5, I'm sorry, L5. L5 is this. But first, if it is not greater than L5, then there's nothing to do. Let me put it this way. I think it's better to write it this way. Alternate, let me do it again. Let me do it here. So if this thing is less than this thing, no problem, right? Or actually less than equal to, probably that's why I didn't do it this way. All you need to do is simply what? Multiply all of this by March price, and then that's it, right? Problem solved. But then there may be cases where this is not less than this. It could be, what if it is greater than this? And in that case, second comma means, otherwise, right? The first comma is and. So if this is less than this, everything can be handled by this, right? All the ending inventory must have come from this. But if this number is greater than that, then we will first 1,525 of the ending inventory should be digested by. It is it is handled by this, but the remainder. But then the remainder is what? This minus this. Okay. But some people might say, how can you, this is, no, of course, in this case, it can be handled already by this. But then, what if this was not 4,500? What if it was 14,500? Then, first, this much should be valued by this, and the difference, which is this minus this, shall be handled by the next month, right? Okay. Of course, in this case, the second part of the logic won't kick in. Second part of the logic won't kick in because this doesn't apply, right? Because this one is already is satisfied, right? This condition is already fulfilled, is satisfied. Okay. There you go. So it's going to be like this. All right. But let's say, what if, so let's suppose, ending inventory is like this. Okay. And then change all Q4s to Q7. There you go. It's going to be this, because that would be the case where, in this case, what? Where is Q4 still? Why is it still Q4? But the result doesn't change because it is the second case in this. If this is less than L5, then all you need to do is just simply Q7 times M5. But then this is not the case that applies now, because Q7 is greater than um, Q7 is greater than L5. So this part of the logic will kick in. This won't be executed because this doesn't apply. This one applies now, right? This one applies. Um, so by doing this, applying this logic, this is a very simple logical algorithm, but that is a big step if you can do that. And then if we use LIFO assumes, so here, I'm gonna, also do this, let's do this. So in LIFO, right, the assumption is switched. And this is very unnatural assumption. Why? Because that means last in, first out. I mean, think about it. In reverse order, can it happen in reverse order? I mean, what came in March, can it have been sold out first? The only way it can happen is, let's say all the January, February batch were not sold until March, and only in March, as March batch came in, March batch got sold, and remain January, February batch were never even touched. And it is only possible, let's say consumers knew that the new product is coming out, right? New model is coming out in March, and the new model is, completely, enhanced. So they are postponing purchase until March. So January and February batch are old models, so they don't have to buy. Of course, if that is the case, they will. If new models are coming out, they will try to sell January, February batch at a very discounted price, at deeply discounted price. Then they can sell. But if that is the case, then they wait until March, and when the new model came out in March, then they will all buy this. So then January, February will stand no chance of getting sold. But anyway, if that is the assumption, then yeah, we'll do. If this is less than this, right? Nothing to do. There's nothing to do, right? I mean, nothing to do. You simply just apply that by January price, but then this logic will not be executed because this doesn't apply. And then second comma is otherwise. I've been telling you. If that's not the case, then what do? This much of the out of this ending inventory will be sold at January price, and the difference will be, of course, this minus this will be sold at February price, will be valued at will be valued at February price. And here, one thing you need to focus on is that, okay, so after breaking it by this and the rest, I mean, this minus this, will it be smaller than this or will it be greater than this? And apparently it's smaller than this. If it is smaller than this, all of it can be handled by this. In other words, all of it can come out of this. But if that difference is greater than this, then you will have to go to another month, right? But of course, usually, on a quarterly cycle, the maximum, or quarterly cycle, the maximum we can go to is only 3 months. Not, it cannot, right? The quantity in the ending inventory cannot be greater than, the total of the GAS. So it's done. Give it, $sign. All right. And always, when it's done, you give it nice, clear outside border. Okay. Of course, it should have, weighted average there too. Okay. Now, so we're out of time. I'm gonna have to let you go. Any questions so far? Any questions? Any questions?
Yeah, I have a question.
Yeah. Somebody have a question?
Yes.
Yeah. What is it?
What was the topics that you said the final is going to be on? Topic 6, 7, and 8. Would you say?
Everything after the midterm.
Oh, okay.
So it's gonna be, homework 3, 4, 5. Which are topics 3, 4, 5, 6?
Okay, so 3 to 6. And also, did you get a chance to grade homework 4 yet?
I did. If you have submitted, you must have got it back.
I submitted it, but I didn't get it back on email.
Who is this?
Stephen had it.
Stephen, you got it back. Let's see. That's not homework 4. That's your homework 5, I believe. So that's your homework.
The first one is is homework number 4.
Okay, so I didn't. Okay, well, if it isn't, maybe I haven't. But let me see. I graded yours. I probably didn't reply because. Okay, so, no, yours wasn't done yet. So yeah, you'll get it back. You'll get it back today, or at least by tomorrow.
Okay, sounds good. Thank you.
All right. Any other questions? Okay, so if you, I will see you guys tomorrow. Stay safe, and okay, so that's. I'm signing out. First, stop recording.